Good morning and welcome to Signal Centre's Talking Bull. This is Steve O'Hare. Joe's not with me today. Hopefully he'll be back next week. And we are the 4th of August and we're non-farm payroll day, the day after Bank of England hiked rates again. I'm going to run through the news headlines, give you a little bit of colour on that, and then dive into the technicals, take a look at all the major asset obviously also listen out to what you're looking at. Ping me if you want me to take a look at a particular market and give you my view on it. It's always nice to have another person's view. I'm really going to look at it mainly from the technical side of things. So let's dive in. Bank of England increased interest rates by 25 basis points to 5.25% at this latest policy meeting. This was the 14th consecutive rate hike and took rates to a 15-year high. The decision was in line with consensus forecasts, although some people were going for a 50 basis point hike. Haskell and Mann voted for a 50 basis point hike to act forcefully against inflation, while Dhingra again voted for no change in rates due to the risk of tightening too far. And forward guidance was mixed, with the bank stating that policy is now restrictive, but also warning over services sector inflation with a particular focus on wages. UK yields moved lower after the policy decision, with expectations of peak rates also edging lower. The UK two-year yield dipped to 4.87 before a recovery to 4.95%. The US ISM non-manufacturing index retreated to 52.7 for July from 53.9 previously, slightly below consensus forecasts. There was also slightly lower rates of growth in business activity and new orders, while order backlogs reverted to small growth on the month. There's only a slight employment increase for the month, while prices increased at a slightly faster rate. US initial jobless claims increased slightly to 227,000 in the latest week from 221,000 previously, and in line with the market expectations, while continuing claims increased to 1.7 million from 1.68. Challenger data recorded a decline in layoffs to 23,700 for July from 40,700 previously, and the first annual decline since May 2022. The dollar posted 4-week highs on Thursday amid higher US yields and fragile risk appetite. There was a significant retreat from the intraday highs, with a significant yen recovery, while risk conditions also stabilized. Swiss consumer prices declined 0.1% for July, compared with expectations of 0.2 retreat on the month. Saudi Arabia announced on Thursday that oil production cuts could be extended at least to the end of September. Russia also announced a cut in exports for September. That's what messed my gun-to-head trade idea up yesterday, apart from the fact I completely got it wrong. The US employment report will be released on Friday, with consensus forecast for an increase in non-farm payrolls of just above 200,000. With the unemployment rate expected to remain at 3.6, average hourly earnings are forecast to increase 0.3 on the month. The Canadian jobs data will also be released on Friday, with consensus forecast for an employment increase of 25,000 and the employment rate nudging higher to 5.5 from 5.4. So that's the main headlines out the way. Let's dive into the charts and we'll take a look at Bitcoin first. Now, you haven't taken a look at the weekly chart for a while. This weekly chart showed this inverse head and shoulders, which has sort of played out. It got halfway to its target. 35,000 was the measured move target, which is the measurement from the head to the neckline and extending it higher. But we have managed to stem this recovery. This recovery higher has been stemmed by this huge resistance level that we've had. It's a range, really, 29,000 to around about 32,000, and it's been too hard to get through at the moment. Prices over the last few days have broken down to the downside, probably supported though by this the start of the range, which comes in just under the 29,000 mark. XRP still under a little bit of pressure. Looking at the daily chart is probably a better thing to do. We've broken higher, but we're posting lower highs now, and even breaking through the previous support level, which we picked out at 66.73.5, which was the low the day after the SEC lost the case to Ripple. Just breaking down below there, so looking slightly negative. I think someone asked about Matic a little while ago, and yeah, that seems to be sort of like heading lower as well, breaking through a little bit of support, the 1st of August support, and also going to looking to challenge really this 65 level, which is the swing low from the 6th of July. Let's take a look at commodities. Good morning, Watch. Yeah, I'm going to have a look at sterling yen for you. No problem at all. Let's take a look at gold. This is what an interesting one. We're at a real key level now of 1935, around that area. 1930 to 35 is a key level. It has been for a long time. We can even go back to 22nd and the 21st of March, and that was a low there. Previously, it acted as a bit of resistance, and we've swung about around this level for quite a while now. The levels above, we've got resistance around about that 1960-63 level, but the major one is 1981. Now, we are seeing this potential for this inverse head and shoulders formation. It's not a classic one, as I've explained this week on the videos. Normally, you like to see these at the bottom of a trend. It's more of an inter-trend one. We've seen this large uptrend here, and it's more of a pullback inverse head and shoulders formation. So the same sort of price action is going on, but it's not a classic one. So the confidence on it would be a lot less than if it was at the bottom of a trend. However, we have eked out, I picked this up really before we eked out this right shoulder. Right shoulder has now formed, and it's really a question of what happens today. And it's interesting because we've got non-farm payroll today, and we're expecting huge amount of volatility, especially with the dollar. The dollar will impact on gold. So really, if we do, we've just hit a 4-week high in the dollar. If we do get any sort of correction, gold could react from this level. So, but as I say, it's quite a pivotal level. It's very, suggesting to put a trade on before the figure isn't the best idea in the world. But we do have a gun-to-head challenge that we like to throw in there to spice things up for ourselves, and that is potentially a gun-to-head trade idea where I would sort of like look to get long to target that reaction higher up to the neckline again, potentially through. If we do get through, the measured move target is the all-time high. It's quite exciting, but that would mean dollar would be getting battered. So let's have a look at that a bit later on. Move on to what we see in oil. Now, this is the reaction higher. I went short of oil yesterday on the gun-to-head trade I did and got smacked back down again. This bearish, this evening hanging man formation, and the big bearish outside candle, which took out 3 days of positive price action. And we snapped back again yesterday with that news that Saudis and Russia continuing oil output cuts. So yeah, a bit of a nasty one. You can see it here. This was a trade idea. Ouch. Looking for quite a big move to the downside. Actually it formed a double bottom here and extended higher nicely. So yep, wrong again, Stevie boy. Not doing well on this. On the 4-hour chart though, interesting to see price action. What did find support of this 4-hour candle? That was like one of the main things yesterday, which made me a little bit nervous about this. It hadn't broken through the 4-hour trend higher. So anyway, that's the oil out the way, gold out the way. Let's take a look at some FX and take a look in particular to start with at the dollar index. You can see almost a shooting star type candle in the dollar index. We've stalled around that 78.6% fib retracement level. Is that enough? Have we done enough? Really, we've got to watch this level closely. Wednesday's price action was really positive, and that came after Tuesday's shooting star candle. So another sort of like impulse move higher, but it has been quite an acute angle. So very likely to have some sort of correction at some point. We had one correction when we moved up and posted a high of 101.65, had the correction all the way back down to 155, and then the extension higher. So a bit of an ABC correction, maybe. This could be the end of it, possibly. We'll definitely get some volatility later, so it'd be interesting to look at that and watch out for that. So euro dollar hit the 61.8% fib. That found support there, and it's reacted higher. So nice positive candle there, and sterling dollar as well. Obviously, you got the rate hike out of UK as expected, but that did lend a hand to sterling strength yesterday. Are we seeing a morning star formation posting here? A decent day today, that would have been dollar weakness again. So potentially a bit of a turnaround on Friday. Let's take a look. We've got a request for sterling yen. Any other people that want me to take a look at stuff, let me know. Sterling yen. Let's take a look at this. I'll look at the weekly chart. Obviously, the extension higher has been pretty incredible. Sterling finding great strength, obviously raising rates at that rapid rate, 14 times on the spin. That's pretty impressive. Yesterday, we did get this real sell-off in sterling yen, and but the correction higher was just as aggressive. Oh, sorry, that's on the week, not yesterday. Let's take a look at the daily chart. Getting confused here, Stevie boy. We had the sell-off last week into Friday, and we posted a low Friday, but then the recovery started Friday, and we've had a couple of positive days, a couple of negative days, and now we're sort of almost stabilized. So really looking at 180.47 on here as a support level for sterling yen. The turnaround here, bearish engulfing at the top. Quite a volatile day yesterday, obviously. The wicks on the candle sort of like quite big as well. So really, if we look at I would say if we look at the body of yesterday's candle, which would be the open and the close, 182.08 would be resistance, 180.40 would be support, and wouldn't be surprised if we treat that as a bit of a range break trade. So looking for a break of either to go with the flow. So yeah, bit it in the middle, bit in no man's land really on that. On the 4-hour chart, yeah, it sort of like marries up with quite a lot of sideways price action. We're in positive territory at the moment, according to Ichimoku Cloud, so the trend is slightly moving higher, but I wouldn't be hanging my hat on anything soon. It does look a bit toppy up here on the 4-hour chart, and yeah, like I say, 180.43 would be the level I'd be watching if I was looking to set shorts, potentially setting shorts on a break of there, looking for a bit more of an extended move to the downside. If I'm sitting there with longs, expecting this to move higher, then I would treat that as a decent stop level to offload some position, or maybe even if I'm really confident, adding to longs on a break of 181.74. So that's my look at sterling yen. Hope that helps. Let's take a look at indices now. How did they fare yesterday? A bit of a recovery, really, overall. Let's take a look at the daily chart because we've seen a real aggressive sell-off since Monday's doji high candle. We've got that evening doji star formation formed really nicely, and that led to an aggressive break the next day as well. Opened with a gap opened on Wednesday, filled the gap, and then continued to move lower. Today's price action really not giving anything away. Looks like we've stalled on this sell-off ever so slightly, but I'd still be a bit concerned with what's going on there. Yeah, but potentially, are we looking at a little bit of a stall in this sell-off? Maybe. US markets, similar sort of price action, broke through the support. It looks like a bit of a range trading at the moment. Broke through the support, but did close above it. That's 35,200, and sitting 75 points above there at the moment. So not really giving us much clues, but does feel maybe we've sort of had this correction. That's enough. Doji candle in Nasdaq yesterday, and a supportive looking candle to start the day here. So yeah, maybe we're getting a little bit of a turnaround in those indices on the US side of things. Had a request from Greek Solia, Euro Swiss. Let me take a look at that. Always like to look at things which I haven't looked at for a while. Take a look at Euro Swiss. First of all, weekly chart. Let's drive down into it. So weekly looks pretty bearish at the moment. We're looking at a bit of a supportive area that's to target. Let's be clear on that support. The weekly chart, we've seen last week, we actually got down to, what was it, around about 95.22. And this week has been a little bit more positive. So we had 6 weeks of negative price action since posting that shooting star candle on the week of 19th of June. Negative, negative, negative. Euro weakening, Swiss strengthening. and we seem to have stalled yesterday, but still, you know, doji candle on the week, not giving much away. The last few days, last couple of days have been negative. We had this spike higher on Wednesday. That gave up the gains, shooting star candle, and then a bearish day the next day, although we're getting back those losses as we speak now, even we're only 8 hours into the day, and we're recapturing yesterday's losses. So again, could it be potentially be a bit of an ABC correction after the this sell-off? Let's take a look at the 4-hour chart, if that gives us a little bit more indication on the short term. Yeah, nice little little double bottom here, but that's, you know, it's only in the space of like 12-16 hours. That break to the higher looks quite nice. We're broken above the Ichimoku cloud, so it's found support at the bottom of the cloud and broken higher. You can see the MACD, obviously momentum turning to the upside and looking to cross over. So that looks slightly more positive on a short-term basis rather than the long-term basis for Euro Swiss. Hourly chart, obviously, you can see in the last hour we have broken higher, so looking decent there. We do expect to find some sort of resistance, maybe up around about the 96 level, trading at 95, 96 at the moment, so just above there, 96.12 potentially looking at as support. But we have, if you look at it from a sort of like an hourly perspective, we have posted higher lows. So really looking to challenge whether we can, and higher highs really over this since the sort of 26th of July up until now. So really, I would look at that 96.12 as a potential next resistance level. Support sitting nicely at 95.60. And looking good in the last hour. So yeah, nice. Obviously, longer term doesn't look so clever, but looking good at the moment. Okay, let's move on to what used to be my favorite part of the show, but it doesn't feel like the favorite part of the show any longer. It's where me and Joe normally pick a trade at market. We set a stop and target. We risk 1% of capital. We have a duty to provide a trade idea, which is 2 to 1 or better. Trades are closed at 9 p.m. So that's just over 12 hours from now. And or if they hit the stop and target, obviously they're closed then. But you know, we normally close them at 9 p.m. We're trying to show you how difficult it is to just one, be put on the spot to pick a trade. As technical analysts, we like to look at areas of support resistance to place our entry levels, really, or place our stop levels, whatever it is. Obviously, stop levels would place just outside of those areas of support and resistance to give us a little bit more chance. And with this challenge, we're really looking to show you how difficult it is to actually pick a trade idea with a gun to your head. Not a real gun, obviously. So let's dive into Oanda. I'll show you how we're doing so far this year. Not very good. We're £1,700. We started with a £2,000 account. We're down 15%. We're 8 months in to the year. It's not looking good, Stevie boy. I'd take flat right now if we could get that back to flat by the end of the year. So we've been doing this for 2 or 3 years before, and we've had some good results, which doesn't make sense. But I'm going to stick to sort of like what I've always done, really looking at those time frames, looking at and trying to catch something. But you know, as a trader, I've always really sort of like tried to pick my levels. So the one for me today is going to be gold. It's got to be gold, and I am sort of like looking at this really inverse head and shoulders formation. Thinking about the dollar as well. Dollar at 4-week highs. It's got there quite quickly. Potentially playing that risk reward trade really. I know the support around this 1930-35 level. We're holding just above it. There's a big volatility event coming out this afternoon, and dollar will move whatever happens. So I'm going to go with the contrarian trade on the short-term chart, which is looking at this as maybe even a inverse head and shoulders formation itself. 1940. I think if we can get above 1940, extend above there on the back of the non-farm, I'll be sitting pretty. The low we've had is 1929.60, so I'd want to place my stop below there. So this is the sort of thing I'm looking at doing. And you know what, on this sort of event, I'm going to really go for it. I'm going to be really greedy. Going to go for 1980 is the big resistance level, but I'm going to go for something like this. Let's try and get it on. Right, we only want to risk 1%, which is quite a tricky thing to do. Oh, 1% isn't giving us much at all. So I'll have to adjust this. Let's see what I can adjust it to. So here we're risking £17. So we're risking 1% there. That's 3 units. Does that work out right? It feels like it does. Yeah, we've got it on anyway. So put the levels in after. That's around about there. There. That's what we're looking at as the trade idea. We're looking for a big move to the upside. Yeah, how exciting. Let's see if it plays out. I'm nervous now already. Yeah, yeah, Mosh, yeah, good luck with that. Yeah, absolutely true. I do need a lot of luck with this one. A little bit desperate maybe. So shouldn't really be doing desperate trades, but it's just a bit of fun. Let's take a look now at what we're finishing off with. We've got US unemployment report and the Canadian unemployment report or employment report. And for next week, we've got US consumer prices, UK GDP. So lots to get our teeth into next week as well. But let's try and get today out of the way and escape unhurt. Remember, I've got the stop in there. I know potentially I'll lose 1%. So that's the idea behind it. Make sure you have stops in there. Okay, lovely. Thanks for joining me today and hope you've enjoyed it and look forward to catching up again next week. Cheers, everyone.